This video is sponsored by Wallmine. It is this super cool platform when it comes to researching stocks. Check them out for completely free using my link in the description below. Hey guys, and welcome back to another video here on the channel. My name is Brandon. If you're new, be sure to subscribe because we post weekly videos on the stock market, and we do always have our investing academy. If you're a beginner, that'll be that first link down below. But in this video, we're going to be going over two stocks and a bonus third higher risk stock to buy right now. This is our series where we cover a Canadian stock, a US stock, usually just two, but we are throwing in the bonus Canadian one today. So double dip on the Canadians. I know you guys are always asking for more Canadian content. I do know very briefly that a lot of us are very uncomfortable in this market. We don't want to invest. We don't want to buy stocks because we could have a whole lot worse in store. And that very well could be the case. But my approach on investing as a long-term investor is really no matter how the markets are, it's still good to try your best to find these opportunities amongst the broader market. And at any given point, there are some stocks that are showing more value than others. That's hopefully what I'll be able to share with you guys in this video, is a couple of really cool picks for the long term. So with all that said, let's hop right on into things. Very briefly though, if you do enjoy, feel free to give this one a thumbs up. That is just a great way of supporting the channel. But let's start with our Canadian pick, and it is the company Bank of Nova Scotia. The ticker is BNS.TO. And what we'll be looking at for this guy, currently we're looking at about a 6.3% dividend. So that's totally drawing a ton of investors in. This is definitely bumped up due to this drop that we've seen. Usually the dividend's hovering around 3-4%. But Bank of Nova Scotia is a stock that we have covered on the channel a couple times. We actually touched on them quite briefly. But this is, of course, the third largest bank when you look in terms of market cap or in terms of size of the six major banks in Canada. Only behind that, of course, behind TD and Royal Bank, the two major players. Pretty much like all of the other major banks, you got your full suite of services from retail banking, mortgages, wealth management. They, of course, got their Scotia iTrade platform for the investors, and there is probably a good chunk of you guys watching this video who do use iTrade. A fun little fact that a lot of people don't know, Tangerine, one of the, I guess, more modern, younger companies that you hear about, they're absolutely a subsidiary of Scotiabank. So a nice little umbrella they got there. On a side note, I was actually just in a Scotiabank last week. I was looking at some mortgage stuff, and they were super, super friendly. And I kind of liked the whole feel on the inside. And maybe that was just the branch that I was visiting. But overall, I did have a good experience there. Just as a little background on Bank of Nova Scotia, what I find to be quite interesting is although, of course, they are a Canadian bank, a big chunk of their earnings actually derives outside of Canada. And we see here only a portion of them are actually the Canadian unit. This company has a lot of exposure into markets, in particular in the Latin America region. So areas like Mexico and Peru and Chile, they're actually very predominant over there. And that global exposure definitely sets them aside from some of the other banks here. The other banks have primarily exposure to US and Canada, North America, but this is a little more unique. You even have exposure to the Caribbean, which is, you don't really think about all the time when you come across a Bank in Nova Scotia. In terms of share price, we have seen a pretty big drop. Actually, the stock's down off these highs was about 30%. It has kind of picked up as of recently, just with the broader weakness that this whole coronavirus has put on really every business out there, but in particular, the international areas of Bank of Nova Scotia have seen a pretty big hit. One bright side to this is that with the drop in share price, we are seeing the PE ratio at about a 9.4, which in comparison to the sector average, we are seeing it at a bit lower than the average of the rest of the banks. So definitely a positive in that standpoint if you are looking for some Canadian bank exposure. Again, I'm a fan of pretty much all the banks. I feel like I say this time and time again, just because they're so reliable in terms of dividends and performance-wise, as a group, they've all tended to do quite well. In fact, Bank of Nova Scotia, over a 20-year period, I believe their average rate of return was 10.4%. So that's a compound annual rate of return that is absolutely outpacing the S&P 500. And a more realistic comparison is if we compare that to the TSX, which is, I like to say, in that 5 to 6% range over the long term. This has been a great performer. And I did mention the dividends there. They've got a 6% growth rate on the dividend. And again, looking at the price of, or the yield of it today, 6.32%, which in my opinion is just a very, very juicy yield, starting yield to be looking at. And amongst the options out there, I'd like to think one of the more reliable ones, one of the less susceptible to getting cut. So Bank of Nova Scotia is our first stock of the day, of the video. Again, ticker's BNS there, and the stock as of today is trading for exactly $57 flat. Moving along into our second stock, this is where we hop over to the American one, and it is the pharmaceutical company Pfizer, ticker PFE. The dividend on Pfizer as well is quite nice, not as nice, but we're looking at about a 4.40% dividend. And a lot of you that follow the investing space will be familiar with Pfizer, but if it's a name that you've never heard about before, you do know one of the products that they used to produce, Viagra. So Pfizer was the company behind the little blue pill. That was kind of, I guess, their, at least as a younger person myself, that was the main product that I kind of grew up knowing about. Not that I like just knowing about it generally, right? Since then, this goes back about a year, I believe it was, Pfizer did lose their patent to be the sole producer of Viagra, so it's no longer their drug. Generic producers can replicate and make their own versions of it. But regardless, what Pfizer does is they are just a massive, massive company when it comes to prescription drugs and vaccines. They're really putting a lot of the focus on researching and developing new drugs. I know that a lot of people are probably thinking right now, the reason I include a stock like Pfizer, or a company like Pfizer, I should say, in this video is because they're going to find the cure to the coronavirus. And that is by no means actually the reason why I would include it today. Pfizer is a company that, coronavirus aside, is a very, very well diverse. They've got a ton of different products and a ton of different drugs under their umbrella, totally aside from the coronavirus. But the news that did come out recently was they had been kind of partnered with actually a smaller company who I'd never heard about. It is the company BioNTech. They're working together on a little venture to develop a vaccine. There was some kind of promising news, I believe, last week, which did have a little spike up in the stock. But my advice to anybody who's looking to make a play on this vaccine, which I know is a super hot area, right? I'm going to find this little company that's going to knock it out of the park when they do finally hit the cure or the vaccine for the coronavirus. That is something that I personally, as an investor, would never recommend to go out, especially for these small cap, these what you're doing is just swinging for a home run hit. And most of the time people strike out when it comes to trying to find that one company that will ultimately come up with the cure. I much prefer to play the coronavirus. If you want to look at it this way and play like the whole coronavirus vaccine play it with one of the big boys like Pfizer, because again, you are getting the exposure through them. And then you also have their wide range of other vaccines, their other products, their other prescription drugs that they develop that each and every day are selling regardless of what we're going through now. In fact, just to give you some idea of size, Pfizer in 2019, they pulled in about $51 billion in revenue. So just a massive, massive company. They're really one of the world's largest players in the pharmaceutical space. You'll notice some of their brands. This is with a joint venture they have with a company GSK, GlaxoSmithKline, something. I always never know how to pronounce that name. You'll recognize some of these brands absolutely in terms of just the over-the-counter drugs. They are going through a pretty big transformation in terms of a big spin-off that's currently going on as we place. They're actually spinning off one of their previous divisions, which was titled Upjohn. I always find that a funny name. You're probably thinking, what's Upjohn, right? What's Upjohn? Upjohn was just one of their divisions, which they are branching off. They're actually kind of trimming down what they do. Pfizer now is just to kind of streamline and focus in on really the research and development side of things, as I kind of touched on at the top of this. In terms of the share price, stock has been kind of on a steady decline for the better part of the last year, or going back to 2019. You are starting to see this PE ratio get into a really nice area. To me, the 12 12 PE, that's something that I can definitely live with. And again, you are pulling in the 4% dividend. They've actually seen this dividend growth for 9 consecutive years. So one of the articles I came across said that the dividend may be in jeopardy due to the whole sell-off of their Upjohn division, and they're going to be receiving less cash flow. If anything, I believe what we'd see is a dividend. They trim their dividend. They wouldn't probably stop it all out, but hey, we are going through these crazy times, as I need to say video after video, and really right now, I think nothing is for certain. But what I could say for certain, well, some things are for certain, because what I would like to say is that Pfizer as a company, in terms of a major player in the pharmaceutical space, this is one that I would absolutely be comfortable holding in my portfolio for the long term. And to finish off this little segment, I came across this chart, which is a negative, in my opinion, for Pfizer. It details here the share price along with the Robinhood holders. And Robinhood, for our Canadian viewers, this is one of the free trading platforms over in the States. So you could kind of draw the comparable to Wealthsimple Trade. Very similar idea. Kind of a lot of young investors and millennials who are using the platform. And when you see a chart like this, where you see a big spike up in Robinhood users, not the kind of thing you want to see. These people are like sheep, just flinging around to the whatever stock is just going to pump up here and there. And I guarantee you, the reason we're seeing this spike is because of the talks of the coronavirus, the progress they're making on the vaccine. But this is definitely not the prettiest sign. It's not something that I like to see. That said, hopefully it's just a short-term little spike here and they don't influence the stock or anything like crazy, because I do think long-term, Pfizer is a company that we could look to maybe start a position in. Again, this is just an alternative if you don't have any healthcare exposure. Another great option you could look into is a company like Johnson & Johnson. Just these major players that are super diverse. That to me is the way to play this space. The stock currently trades for $34 USD. Again, this is our American stock traded on the New York Stock Exchange with the 4.4% dividend. And to finish off this video, I said we do have a bonus stock in here, and this is going to be a brief one, but I got a question on the Q&A that I did last video, and it was from, I forget who exactly it was from, I apologize, but it said, what are some REITs that you think will make it out of this coronavirus situation? And I thought that was a really good question, because to reiterate, real estate has been a very, very tough area, as we know, especially the commercial buildings with nobody being able to work and whatnot. And I think we're going to see a lot of troubles going forward. But if you are willing to take on that risk, in the sense that things will be rough going over the next year and potentially going forward, the stock that I think would be a good one to look into is the company Brookfield Property Partners, ticker BPY.UN. So that's the Canadian one that we'd be looking at. And this is, of course, kind of the real estate play, because Brookfield Property Partners, this is one of the divisions of Brookfield Asset Management, which is a company that I own. I prefer to kind of own the parent company rather than going in specifically on the real estate play, because you guys know me, I'm not a huge fan of investing in real estate investments directly. But if we were going to look at some that I think are good quality businesses, again, expecting some volatility over the short term, Brookfield Property Partners is definitely one that's high on my list. They have properties pretty much all over the globe, spanning from Toronto, New York to Berlin. They kind of have, you'll see the different areas. Primarily with this company is office buildings, office commercial buildings, as well as retail. So that's really where they specialize in. And again, before you invest in the stock, especially if you're doing it solely for the income, which is really why you'd invest in a stock like this. The dividend yield, by the way, if I didn't mention, is up at about 8%. Currently, we're looking at stock has dropped off quite significantly. If we look down here, about 35% drop. They have yet to cut their dividend, or their distribution, I should say, here in Canada, but it's not out of the question. And if we were to see especially a second lockdown, I know we have cases coming up, still spiking, or maybe more coming. Haven't looked at the up-to-date numbers, but if we were to see something as drastic as we went through before, I can't see it being possible that they're able to sustain this. Again, long term, I don't see a company like this going out of business. They're one of the premium real estate options, in my opinion. Not to mention that, of course, they have backing from Brookfield Asset Management, the parent company, which is always a good sign, always nice to fall back on. But if we were to go into another lockdown, it would be tough. So again, a high risk play for this video, and this is just our bonus one. I'll actually give, before I end off this video, a brief little shout out to a channel that I actually enjoy watching, a very, very small one. I don't even know how I came across it, but it's a guy named Ostrich Investing. I believe it is Ostrich. I'll put a link to his channel down below, but he did a good video recently on Brookfield Property Partners. This stock in particular, you can definitely go check it out if you want to learn more. But if you've got the long-term outlook for this one, just to kind of answer the question that we got on the Q&A, this could be one of those options. This, along with a company like RioCan, and of course, we want to be leaning towards the bigger, safer ones in this case. Brookfield Property Partners, price you'd be looking at today is $15.42 Canadian. Again, you got the 8.17% dividend due to the recent drop. But that's just our bonus one, and that is our 3 stocks for this video. Let's call my main 2 stocks for this video, Bank of Nova Scotia, and then as well, it was, what was the other one? Pfizer. Those were our 2 stocks. This is kind of just our higher risk one that I did want to throw in for you guys. Let me know down below what you think of my picks for this video. Do you like them? Do you dislike them? Or do you have any better picks, better than mine? I'd be happy to hear your opinions down below. If you did enjoy the video, if you're enjoying the content here on the channel, all I ask is to drop a quick little thumbs up on the video. That is just the best way you could support the channel. Truly helps out more than you would know. You can subscribe for more content too, if it is your first time here, because we post weekly videos just like this on the stock market for Canadians, is who we specialize in. And then of course, hit the bell for notifications, because that way you get notified when I do post a video. And then we do have our Investing Academy. If you are looking for courses and training for beginners, we can walk you through step by step through the entire process, really solidify your foundation, and you get to join our community of a bunch of really cool people. All Canadians working together to learn investing. That'll be that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next